Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now Ethereum has fully hit the price target for that bear flag pattern. So now the price of Ethereum is seeing a bounce from this important Fibonacci level, and the daily RSI for Ethereum is at the lowest level it's been at in nearly 2 years. This is a big deal for all Ethereum holders out there, so make sure you're watching all the way to the end of this video so that you don't miss out on any of this important information. And just before we jump into it, you might as well leave a like down below, and if you're new to the channel, be sure to subscribe with notifications turned on for more updates just like this every single day. But with all of that out of the way, let's get straight to what this video is about. So right here, we're on the Ethereum to US dollar chart on the 4-hour time frame, and this is that bear flag pattern that I was talking about yesterday on the channel. And in that video, I'll let you know if Ethereum breaks below this exact line of supports coming in close to 3.7k, then we would activate this lower price target for the bear flag pattern, which you basically take the flagpole coming into the pattern like that and bring it over to the other side, and that gives you the technical price target for this pattern, which was coming in between around 3.3 to 3.4 thousand, and Ethereum made it down towards around 3.3k. And right now, at least at the time of filming this video, we are seeing at least a short-term bounce here, but obviously Ethereum is still far from making a new uptrend here on the smaller time frames like the 4-hour charts, for example. Now zooming out to the daily time frame for Ethereum and bringing out the RSI. Currently, the Ethereum RSI on the daily time frame is sitting at around 33, and if I zoom out a little bit further on the chart, this time period that we saw back in the middle of 2021 during the lowest point in the RSI just here, we got down towards around 33.5 approximately. So as of recording this video, currently we are below those lows that we saw in the middle of 2021. But of course, this does not get confirmed until we see the next daily candle close, which at the time of filming this video is still around 9 to 10 hours away. And so when we do see the next daily candle close and set that RSI in place, once again, if it's below 33.5 approximately on the daily RSI for Ethereum, then that would be lower than the 2021 low. So we'd have to zoom out further to find the next point where we went lower than that, and that was during March 2020. So as I said in the intro of this video, the daily RSI for Ethereum is at its lowest point in nearly 2 years. So what does this mean for Ethereum moving forward? Well, it means that the potential room that we have left to the downside is really not as much as the potential room that we have to the upside. For example, if we're looking at the last time the RSI was at these levels, back in around March and April 2020, we got down to these levels after we already saw a massive crash. And then you'll notice that after we saw that bearish price action and after the RSI got to those levels, the room that we had left to the downside was very limited, and that basically forced the price of Ethereum to the upside over the next few months or so. Even looking at some more recent times where the Ethereum RSI on the daily time frame got down to these lower levels just here, for example, in the middle of 2021, that showed us that the potential room to the downside during those time periods just there was very limited, which forced the price of Ethereum back to the upside in the shorter term here, especially if you're holding for the next few months. And that was also the case at the end of the September correction. We did not reach as low as what we're at right now, but relative to everything else that we saw in 2021, the RSI did end up getting pretty low in the September correction, which once again meant that the potential room to the downside was very limited compared to the potential room that we have left to the upside. And so because of that, as I said in the previous examples, that basically forced the price of Ethereum to the upside in the next 1 to 2 months or so. So this can help give us some insight on what the next major trend might be. Obviously, this does not tell us what the immediate short-term price action will be. So for example, just because the RSI is really low on the daily time frame for Ethereum right now, that does not mean we're going to see a full recovery overnight. And technically, we can still experience some short-term bearish price action. For example, like what we saw at the end of September. I'll just zoom into that time period just there, actually, and you can see that we kind of bumped around in that price range for a little while before we finally began the recovery over the next 1 to 2 months. Once again, that's sort of the time frame that we're looking at here. So at least according to the RSI indicator, which has proven itself to be one of the most accurate indicators out there, I will be expecting a recovery or at least a relief rally of some kind within the next 1 to 2 months, so either in January or February. And I know that that's quite a big time window, but remember, this really tells us what's most likely to happen within the next 1 to 2 months or so, not necessarily overnight. So right now, my personal Ethereum strategy is to simply remain dollar cost averaging slowly into the market until eventually, most likely within the next 1 month or so, we see some sort of reversal here. And just before I get into some other important Ethereum charts later in this video, I'll first talk about some Fibonacci levels. This is still on the daily time frame for Ethereum, and recently Ethereum has been respecting the Fibonacci levels quite a lot. For example, up until the recent dump to the downside because of that bear flag, we were finding huge support along the 38.2% Fibonacci level, coming in at around 3.6 to 3.7k. But like I said in yesterday's Ethereum update video, if we break below that important line of support, then it is likely that Ethereum could drop down towards around 3.3 to 3.4 thousand, and that's exactly what we have done. And we've also got this 50% level here coming in at around 3.3k approximately. approximately. So at the time of filming this video, this is currently providing support for Ethereum, but if we break below that level, then the next Fibonacci level, and in fact the most important Fibonacci level, is the golden pocket, and that is coming in at approximately 2.9k, which is close to the same price range that Ethereum was in at the end of the September correction. So because of that, we already know that we should have a decent amount of support at around that sort of price range. But remember, those lower levels of support only come into play if we break below the current levels of support, which are really sitting at around 3.3k approximately. And we still have some other important Ethereum charts that I will be covering in just a moment. But first, I wanted to take a quick look at some of the corrections Ethereum has seen over the past 1 year, just to show anyone new to crypto that the price action that we've been experiencing recently is perfectly normal, and we've actually seen far worse over the past 1 year. So far, from the Ethereum all-time high to the recent low at the time of filming this video, the price of Ethereum has pulled back around 32% approximately. And if you're looking at even just the September correction, the price of Ethereum pulled back around 34%. So that is right, the September correction was actually worse than the correction that we're currently in, at least as of right now. And then looking further back on the chart, this small pullback that we saw during July was nearly a 30% pullback. So that little pullback just there is actually close to the same size that we've seen in this entire pullback over the past 1 to 2 months. And then obviously the crash that we experienced in May 2021 was the most severe crash that we've seen over the past 1 year. In that crash, we saw the price of Ethereum drop 60% in just one single week. So that crash was around twice as severe as the current pullback in Ethereum. And then looking further back in February 2021, we saw a 36% pullback in just 1 week. And then before that, we saw a 32% pullback in January 2021 that lasted over just 2 days. So basically what I'm trying to say is, out of the past 1 year worth of price history, we have seen many other corrections that were actually worse than the one that we're seeing right now. And every single one of these previous corrections for Ethereum, given enough time, eventually recovered back to the upside. So it's important to remain patient in the charts, and when in doubt, zoom out. Now, giving you a quick update on the estimated leverage ratio for Ethereum. I have been talking about this over the past few days now on the channel, so the subscribers would already know about this. But for any of the new viewers out there, the black line just here is the Ethereum price on the daily time frame, and the purple line just here is the estimated leverage ratio for Ethereum, which is calculated by dividing the total amount of Ethereum open interest by the total amount of Ethereum sitting on exchanges. And by the way, open interest is essentially borrowed money. So for example, leverage involved in a leverage trade. So basically, anytime this purple line spikes to the upside, the estimated leverage ratio, that basically means more and more people are using more and more leverage. And so because of that happening, not long after we see a spike in this purple line just here, we soon see a very volatile move in the price of Ethereum. And how do we know that we're playing out that very volatile move? Well, first of all, if the price of Ethereum experiences a massive dump or a massive pump, there's a good chance that that might be the volatile move that we're looking for. But we also need to be keeping an eye on this purple line just here, the estimated leverage ratio, to keep an eye on the open interest. And if it is still up at these really high levels, that means the volatile move hasn't actually come yet. And so I have been saying for the past few days on the channel that there is a pretty good chance that that volatile move could end up being a short squeeze. And I will be explaining again in just a moment why that might be the case. But basically, if the price of Ethereum is trending to the upside and we're seeing the open interest trend to the upside, that usually means that there's more and more people leveraging up on long positions. So then when we see a spike in open interest, that usually means that a long liquidation event or a long squeeze is potentially just around the corner, as we experienced in the beginning of the September correction. And for the complete beginners out there, a long squeeze will basically crash the price of Ethereum, or at least have a bearish effect on the price of Ethereum. But on the flip side, when the price of Ethereum is trending to the downside and the open interest is trending back to the upside, this obviously means that the leverage is still increasing because we're seeing the open interest increase to the upside. But because we're in a downtrend, that usually means a lot of that leverage is in short positions, as we experienced during the middle of 2021 and especially in July 2021 when we experienced that short squeeze. And I'll let you know about that short squeeze around 2 days before it happened, and then we entered the most bullish week and a half of Ethereum's entire price history. And right now, at least at the time of filming this video, we're currently seeing the same ingredients for a potential short squeeze. Of course, nothing is guaranteed, but what we have been seeing over the past 1 to 2 months is the price of Ethereum grinds to the downside, while the open interest, the amount of leverage across exchanges, has been exploding to the upside, showing us that there's potentially a lot of people leveraging up on short positions, similar to what we saw in the middle of 2021. And so basically, we're just waiting for all of this open interest to be flushed out of the market. And when we finally see that happen, that's basically when the next huge liquidation event will be happening. And for anyone wondering, well, what if all of that leverage is in long positions rather than in short positions? Well, I just explained why that might be the case, but we can also look at the exchange data. And right now, if you're looking at all of these exchanges, the majority of positions at the moment are short short positions. Now, usually there's a long for every short and a short for every long, but right now, more than 50% across the majority of exchanges are in short positions, and less than 50% of traders across the majority of these exchanges are sitting in long positions. In fact, this is the case for all of these exchanges except for just this one, which backs up what I was saying about this estimated leverage ratio chart, where a lot of this leverage is essentially parked in short positions waiting to be liquidated. And on top of that, you can simply take a look at the funding rates across all of these exchanges, and right now we are seeing a lot of negative funding rates, showing us that a lot of traders are piling into short positions right now. A lot of people are finally flipping bearish. And finally, I thought I should be updating you on this Ethereum pattern, considering I have been talking about it over the past few days. But basically, this was the falling wedge pattern here on the 12-hour time frame that we were talking about. Technically speaking, it is meant to be a bullish pattern, but in this case, it did end up breaking to the downside. And this is likely because of two reasons. First of all, that bear flag that I was talking about yesterday on the channel, and also because of the stats for a falling wedge pattern. Around 70% of the time, it breaks to the upside, and about 30% of the time, it breaks to the downside. So if you're converting that to a fraction, you could almost say that around 2/3 of the time, it breaks to the upside, and about 1/3 of the time, it breaks to the downside. And if you're zooming all the way out here, we've actually already seen 3 major falling wedge patterns over the past 6 to 8 months or so. And obviously, these other 2 falling wedge patterns broke to the upside, so that's that 2/3. And now the 3rd falling wedge pattern that we've seen has broken to the downside, which in the end does make statistical sense. And if you want to stay up to date in the crypto markets at all times with these extra updates throughout the day, make sure you follow me over on my Twitter. And the link to my Twitter is in the description down below and also in the pinned comment. If you enjoyed this video or got something valuable out of it, please make sure to leave a like down below. And if you're new to the channel, be sure to subscribe with notifications turned on so that you don't miss out on any of these future updates that I post every single day. And as always, I appreciate every single one of you here on the channel. I can't thank you enough. And especially for the new viewers out there, before you click off, make sure you're checking out one of these uploads if you haven't already. But that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.